we saw those disappointing numbers out of East African cables yesterday, and that's seeming to now be trumped by news that we're going to see a one bonus share being issued for every 4 held, and the market getting pretty excited about that instead.
Yeah, well, there was a decline in earnings that's mainly attributable to an unrecurring item. There was a write-off that they did in Tanzania. But that notwithstanding, they still have to appease investors, so you have to find a way of probably giving something to investors without any necessary cash outflow. But at the same time, what impacted their P&L is increase in metal prices, for which they've decided going forward that they'll also increase their selling prices to offset some of those costs.
Of course, that's seeing East African Cable's share price jump 24% yesterday. Let's get into some of the other companies making headlines. We heard, of course, that Centums planning to tap into the booming property market, planning on investing $200 million in the region within that space. Market reaction to that news?
Well, it was flat. We haven't seen any substantial upward movement in price. Well, for the reason being that this doesn't necessarily flow through the income statement immediately. It takes some time before that actually impacts on earnings. So there's actually a long-term adjustment as investors get into the counter slowly. So
let's enhance some understanding there and look at the rationale for Centum's moves. I mean, to meet growing demand of a bulging middle class, where we've often spoken about a growing middle class and rapid urbanization taking place. That's the basic premise, right?
That's correct. I mean, the Kenyan economy and the East African as well has been bullish, mainly driven by the upcoming middle class as they become more liquid, as employment is created, as aggregate demand in the economy goes up, as they buy more products in telecommunications, as the demand for housing also goes up. So basically you find that players in that industry want to leverage on such kind of demand.
If we look at within Kenya specifically, I mean, where we're looking at house price growth of 5.8% for last year compared to 0.8% in 2009, what are the forecasts looking like for this year? Because analysts say the surge in Kenya's real estate market has much further to run.
Yes, well, no one is still coming up with the conclusive figures, but there's still high optimism. This is a country in which the demand for housing is at about 100,000 houses required every year. Supply still cannot meet that. We still have funding issues for which most banks have short-term deposits which they can't match with long-term mortgage loans. But there's still competition intensive in that sector. The only limiting issue is also that mortgage rates are still so high that most Kenyans still can't afford in order to be able to get houses.
Steve, so with projects only set to begin in the fourth quarter and with bulk of the market still sitting on the sidelines, would you be investing right now? Is the appeal strong enough right now?
Definitely. I mean, you try and get in before it becomes overpriced, so you get in before the other investors.
Well, that kind of appeal enough to warrant the cross-listing plans that this company has. We've heard that it's planning on cross-listing on the Ugandan bourse and using that as a launch pad into the rest of Africa.
Well, even prior to that, they've already acquired some huge piece of land in Uganda. And you see, for Centum, this is a situation whereby they're trying to increase visibility in that market. They're also trying to ensure that in the event that they need to raise more capital, then being in that market will be an added advantage. When
it comes to property, Steve, Standard Group is one of the 3 listed companies whose main head office is said to be on the road reserve and subject to Minister Orenga's compulsory purchase order. What's the story that's actually unfolded on that end?
There's still a lot of back and forth movement, a lot of lobbying by the directors and owners of the group. They're trying to leverage on their relationship with government. But I think these are us delaying tactics. Eventually, it's the company that will have to give in. Currently, they are still stuck onto it because they just moved into those premises the other day. But going forward, from what we've seen, it's not the road to move, but the structures to move.
Well, while we wait, though, I mean, we're seeing these companies' share prices being affected by this ongoing wrangle, if we can call it that. And Samir is another company that's being affected. We've got the business park in the Land Minister's crosshairs as well, and that having been pegged to be the next growth leg for Samir moving forward. How much of a distraction has this posed?
Well, not much. Samir has been suffering from intensive competition of importation of tires from various parts of the globe. And this really doesn't have a huge impact in terms of share price movement for Samir.